Hello friends, welcome to learning sessions, and today in this video we are going to discuss about the lender's appraisal procedure, that is extra module from the RBWM over there. And if you have not covered our previous videos where we have covered all the four modules of retail banking and the wealth management, simply do subscribe the channel right now and press the bell notification icon so that you get updated whenever we upload the new videos. The full courses are available on our website where we'll be getting the full course videos, chapter wise professor questions, mock test, mega mock test, and each and everything. So do enroll right now, so you'll be getting it at just 1999. All the four papers, all the materials will be covered, and also you can be getting the access to the free PDFs. You just need to sign up on our website jaiib.learningsessions.in. The link is also available in the description below. So let's start the session over here, and it's related to the lender's appraisal procedure. Now, what do you mean by the lender's appraisal procedure? Let's take case that person A over here, and person A is a person who wants to take a loan. So he will be visiting the branch, will be submitting the application, the bank will be verifying the details and will be asking for the required documents, and further after that all the checking the credit worthiness and the history of the customer and validating the information. The bank will be deciding the quantum of the loan which is to be sanctioned to the borrower over there, and ultimately there will be execution of the document, that is the terms and conditions will be signed, and further there will be disbursement of loan. And after the disbursement it would be related to post monitoring of the loan, right? So that is the main funda related to it. So let's understand this whole process in detail and what are the different steps related to it. So first, it is related to the loan origination. Now, loan origination is related to the processes and the procedures by which the bank is going to approve a loan application that is taken from the borrower over there. And this process is actually having a lot of stages, like it's having the evaluation, and further it's related to checking the risk of lending and determining the terms and conditions. So each and everything is actually is to be covered in this process, right? So let's understand the phases of the loan origination. First of all, it's related to information acquisition. Now, information acquisition is related to that whatsoever the different information that may be available, and we need to basically gather that all necessary information. We can be asking the borrower so as to give that particular document or something related to, or must be providing us the related document or particular let's say information, so that we can look into. The second one, it's related to the credit appraisal. Now, credit appraisal is related to that we will be evaluating, that lender will be evaluating the borrower's credit worthiness. That will be basically assessing the risk associated with the loan over there, and based upon that the bank will be deciding whether to approve the application or not, right? And the third one, it's related to disbursement. Now, disbursement is basically related to that when we are actually going to release the funds to the borrower, that is actually the disbursement component over there. And let's understand what are the different documents are there which may be required while you need to produce while taking a home loan, right? First of all, it's related to duly filled application form is to be submitted, so all the details will be over there. And further, it's related to passport size photograph, proof of identity, PAN card, Aadhaar card, proof of residence, your business proof, ITR. If you're a salaried person, in that scenario you need to submit the bank statement or form number 16. IT assessment, that particularly requires that you need to submit at least 3 years of the ITR. Statement of bank may be required, and other than that, letter of allotment, if basically it's provided by you by some housing board or society over there, you need to basically provide them with the letter of allotment that you are allotted this particular property, right? And further, we also need to submit the approved plan, and that must be a approved plan. A copy of the approved plan is to be submitted, that the building plan is actually approved, and permission for construction it has been given. Like particularly it may be the case that we do require to take permission from some authority, that they have given us the authority that we can be constructing the building upon it, right? And further, it's related to the approved valuer will be giving us the valuation report related to what is the value of this particular property, what is the marketable rate of this particular property, and what will be the construction cost, right? Civil cost related to it. So that's all cost is to be analyzed, and further that must be approved by the approved valuer over there, so that we can be looking into things, and further the quantum of the loan will be decided based upon the data also, right? And after that, it's related to sending the title deeds for legal opinion. Let's say case that the title deeds are obtained. Now, what are title deeds? Title deeds are the documents which will be indicating the ownership of the property, right? And when you have actually obtained the title deed document, those are to be sent to the advocate for the legal opinion purposes. So whatsoever the lawyer who is actually on the panel of the bank over there is to ensure that the title is clear and further free from encumbrances, and it's a marketable title over there, right? So that thing is to be done, and the complete report based upon that will be given, that is said to be the legal opinion over there, right? And further, Which of the documents will be ensuring that the borrower is holding a absolute and marketable title? Let's have a look at it. First of all, it's related to sale deed. Sale deed or agreement of sale over there. When there are two parties, let's say A and B are there, and there is particularly a deed related to A wants to sell the property to B over there. So there will be a sale deed. So there will be a sale deed. Okay, so that must be looked into. And also it may be related to parent document or prior document. Parent document means it's not the case that it has been sold once only, right? It may be the case that the property must have been sold before also. So you need to basically have a complete chain of the same. And in general cases, banks do ask for 30 years of the title deed chain. 30 years of the title deed chain, that particular no encumbrance has been there in that scenario, right? And also we need to take the NEC. Now NEC is what? NEC is a non-encumbrance certificate. It's a quite important document, and you can be obtaining the same document from the sub-registrar office. Further, it's related to search report. Now search report or non-encumbrance certificate would be by the bank advocate. That's another part. One, it's related to which will be given by the registrar over there, sub-registrar over there, and the other NEC and search report that will be given by the advocate, because the advocate who is actually on the panel, lawyer is actually a lawyer on the panel over there, he's also to basically affirm the same, that nothing is actually there, right? And for the it's free of charges, and it's related to possession certificate. Now possession certificate will be given by the revenue authorities, that you are having the possession over that particular property, right? And for the related to latest revenue tax receipt, it may be the case that you must have filed the property tax or something. Now in that scenario, you need to give the particular tax receipt over there, and also other tax receipts applicable, you need to submit the same. And further related to ULC. Now ULC is actually related to usage of land certificate, right? How we are going to use a land over there. For that particular purpose, we need to obtain that particular certificate and NOC related to the same. And also in any of the cases, if it is required that property is being approved by the RERA, okay, in that scenario, that is also to be taken, right? RERA is actually Real Estate Regulatory Authority. So if property comes under the purview of the same, that is also to be obtained, right? So these are the documents which will make sure that the document is that the title deeds are absolute, and further the title is marketable over there, right? And further it's related to the valuation report and the construction plan. Now valuation report and construction plan are very much important. Now valuation is actually related to it. We are going to assess the value of that particular property, right? And the approved valuer who's designated by the bank over there is going to do the same, right? And the other thing, it's related to feasibility check. Now feasibility check is actually related to what? That the valuer will also be assessing the applicant's construction plan. That is the construction plan is feasible, that can be constructed on the given plot over there or not, right? So that feasibility check is also to be done by the valuer over there. Further, it's related to boundary clarity. Now boundary clarity is related to that whatsoever the plot is there, the boundary must be clear and must be marked, okay? So it's actually very much important that whatsoever the property you're going to basically give the construction loan for or housing loan for, you must be clear about the boundaries of that particular property, and further that must be marked, right? And also the engineer approval is required that this property can be built or something related to it, and further comprehensive evaluation is to be done related to construction or something, that is also to be given, right? So that is all about the valuation report and the construction plan. Further, it may be the case that you are going to purchase a built-up house or particularly flat over there. In that scenario, you may require the approval of the local authority or by the proper society or something, and for the up-to-date tax payment are to be paid, right? Like let's say case I'm going to basically giving loan for a built-up house. In that scenario, it may be the case that the tax is pending, so I must be obtaining all the tax receipts, that all the tax so far has been deposited with the authorities, right? And also related to the age confirmation, like how old the building is, and for the estimation future life of the building over there, and RERA approval in any case if it is required, it is also to be submitted, right? So this is actually related to in case of the purchase of building or flat, when we are basically going for built up house or particularly flat over there, right? In that scenario, for that related to applications received through agents. Now bank commonly do receive the housing loan applications from NRI, especially through the agents only. Now in that scenario, let me just tell you that power of attorney, it can also be used, because power of attorney is what? It's a legal document. It's a case person A gave power of attorney to person B over there. Now in that scenario, person A has granted other person the authority. Person A has granted person B the authority that the person B can be acting on behalf of person A. Okay, so now A is the principal and further or particularly grantor over there, and particularly the person B is over here the agent who will be working as per on the behalf of person A over here, right? So let's understand the key points related to power of attorney. So power of attorney can be given to more than one person also. It's not the case that the power of attorney can singularly be given. It can be given to the multiple persons, person A, B, C altogether, or some jointly or separately over there. This authority can be given. And also it's related to that general, it is general power of attorney. Now power of attorney is actually of two categories. It's a general power of attorney, and also it may be a special power of attorney. It may be a special power of attorney. Now if it's a general power of attorney, in that scenario the power of attorney can be applicable or is valid for multiple tasks till it is revoked or till the death of the either party, either A or B or any of the party dies, right? So it will be valid till that date. But special POA, that is a special power of attorney, will be valid for that particular specified task only, for that specified act only, right? And not more than that. And further, let me tell you that if the power of attorney has been executed abroad, now this is a very important concern. If the power of attorney has been executed abroad, now in that scenario the power of attorney must be stamped whensoever it's actually entering in India. So when it's received in India, it must be stamped within a period of 3 months, right? And further, when accepting a power of attorney for mortgage creation purposes, when it is particularly being accepted for mortgage creation purposes, the bank should be verifying the necessity and acceptable reason that why the bank is going to accept the power of attorney for the same, right? And after that, it's related to the appraisal of loan request. Now what do you mean by appraisal of loan request? As I told you, that person A visited your branch and gave the request for the loan over there. Now it's not the case now that he gave the request or application and will be some depositing or we will be disbursing the loan as such. It's not the case. First of all, we are going to verify all the information. We are going to basically check that what quantum of loan is required, for what purpose it is required. All the things will be taken in the form of application form, and then we will be validating the information that whether the information which is actually provided by the borrower or the applicant, is it correct enough or not. We'll be checking the reliability of the information. We'll be going for the accuracy of the information. Also, if any kind of third party security is given or any kind of collateral security is given, we'll be looking for the validity or the feasibility of the same, viability of the same, valuation of the same, right? And for the it can be done through the particular collaboration with the credit verification agency, or we can be going for the property appraisers, bank solicitors, or something like that. And we can also be drawing the credit information report for the same, right? That is actually available from the credit information companies like CIBIL, Experian, etc. We can be going for the and for that, it's related to appraisal form for a housing loan or for a home loan. Now, when we are going for home loan over there, first of all, it basically says that what would be the eligible amount. What will be the eligible amount? Now, in case of home loan, the eligible amount actually is worked upon taking a lot of things in mind. First of all, it's related to age group. That what age group do you basically belonging to? Let's say case you are aged 23 and you are earning a handsome income, and for the in that scenario you can be taking a loan maximum for 30 years over there, right? So this for particular the case, let's say case, the tenure can be maximum up to 30 years over there, right? And further it can be maximum up to age of 65, whatsoever is earlier, it can be up to age of 65 also. In some scenarios it is also allowed for age up to 70 years also, right? Some banks also allowed for the same in the case of pensioners who are having a fixed income out even after the retirement also, right? And after that, it's related to the second criteria when we are deciding the quantum of the home loan. It's related to the minimum home take salary, minimum take home salary. Now minimum take home salary is just like, let's say case that you are earning 50,000 rupees per month. You are earning 50,000 rupees per month, right? And for the, let's say case you are already having the car loan going on or another loan going on, and let's say case that your net salary is 30,000 rupees. Now it's not the case that the bank will be saying that we'll be deducting rupees 30,000 as your housing loan particular installment over there, and you will be granted the quantum. It's not like that. The bank basically says that the person must be having at least 40% or 30% or 50% of the take home salary, right? Now if we basically count 40% of 50,000, in that scenario it counts to be 20,000 over there. So the maximum EMI which can be fixed for that particular person is rupees 10,000 over there. So that's one of the particular examples that I have given. So it can be the different quantum. So if the person is a very high salary taker, in that scenario this take home salary may be a lesser percentage, maybe 10%, maybe 15% also, right? So that also the one of the factor which based upon which we'll be deciding the quantum of the loan. And the third one is related to credit information report score. Definitely it's one of the factor when you are going to check that whether the person is having a very good credit history or not, whether the person has made any kind of delinquency in the past scenario or not. So we are going to go for the same. We are going to check that the person is actually eligible, is credit having the credit worthiness for the same. So if the person is having a very good credit score or high credit score, that basically indicates that the person is responsible financial behavior. Person is having the responsible financial behavior. And for the, if it is so, then definitely the loan eligibility is enhanced, right? And also it's related to geographical eligibility. Now, geographical eligibility is related to that lenders in specific areas or specific territories, lenders are very much comfortable that they can be giving the home loan, because it will be the case that the property rates or the land rates are quite high in that scenario, right? So it could be related to market stability also, the economic stability also, related to growth potentials also, right? So these are the some of the things related to which are taken from the lender's point of view, which are looked into while fixing the quantum of the home loan over there. And the other one, it's related to negative list. Now, negative list is related to what? That those particular actually lenders do maintain a list of disqualifications that can lead to the loan application rejection. When the particular application will be rejected, that can be the scenario like the person have made a default in the past, or it may be a legal issue, or it may be some inadequate documentation over there. Now, in those scenario, in those all scenario, the bank is not going to sanction the loan to the person over there. Okay. Now, let's move further. It's related to other relevant issues at pre-sanction stage. Now, what can be the other issues? First of all, it's related to that the fixed rate loan and the floating rate loan both can be sanctioned. They can both not can be sanctioned. They both may be offered. They both may be offered. So it's a choice of the borrower that what option they want to go for. In case of floating rate loan, definitely with the repricing reset, your EMI will also change. Your EMI amount basically what happens. Let's say case that you have taken a loan of rupees 20 lakh, and further it was granted to you on, it was given to you on 7.8% per annum, right? And further, when the pricing reset was there, your interest rate increased and now it is 8.5%. Now, based upon that, interest rate is changed, and ultimately what will happen? It will increase the amount of interest to be paid. Now, there are two options the lender can go for. The one, it's related to that the lender will be changing the EMI, but that's not the case. The banks never do change the EMI. They do decrease or increase the number of EMIs based upon the same, right? Based upon the interest rate, whatsoever amount of difference will be that, the banks will be changing the number of installments based upon the same, right? So that's the first case. And the other one, it's related to insurance. Now, let's say case person B wants to take a home loan for construction of house. Now, that scenario, the banks do insure the reconstruction at the reconstruction cost, or at the replacement value over there, right? So that is actually the insurance, and that's quite mandatory in all the scenarios, right? It basically protects the house from riots, fire, earthquake, lighting, floods, etc. So it's a good thing. And the third one is related to moratorium. Now, moratorium is actually the repayment holiday during which you need not to pay a penny to the bank over there, but interest will be charged to you, right? Like in case of construction of the home, it basically the banks can give you maximum of 18 months of the repayment holiday period. And in case of let's say when you are going to avail a built up house or a flat, the banks can be allowing you 3 months of the moratorium period, right? And further, it's related to pre-EMI interest. Now, as I told you that moratorium period is given, as I told, let's say case that 18 months of moratorium period was given. Now, in that scenario, there is no EMI repayment that you need to do for 18 months, but definitely the interest will be charged for this particular period. The interest will be charged for this particular period, and you have to pay the interest over there, right? Now, this interest amount along with the principal amount will be set together, and EMI will be actually be constituted based upon the same, right? It will be constituted based upon the same over here, right? So that's the pre-EMI interest, right? And further, it's related to EMI reset. As I told you that floating rate interest, you go for floating rate of interest. In that scenario, when the your rate of interest will reset, it may be the case that your interest may increase or interest rate may decrease. Now, based upon that, the banks are not going to alter the EMI amount, but the bank may be increasing or reducing or decreasing the number of EMIs based upon the change in the total dues, right? And further, it's related to the check-off facility. Now, let's say case that you're a salaried person, and in that scenario, employer must be giving a particular report and a particular confirmation related to that the particular amount of installment will be debited from the employer, and further it will be deposited by the employer directly to the bank over there, right? So it's a check-off facility. Now, let's understand the mortgage. Now, what do you mean by mortgage? mortgage is a legal agreement. So whensoever the borrowers are going for a home loan, they create a charge of mortgage. Now in this case, a person want to take a loan from bank XYZ, right? And it's a home loan, and for that scenario, person A created a charge of mortgage on his house. So it's a charge of mortgage. It's a charge of mortgage over there. Now person A over here would be the mortgager. Person A over here would be the mortgager who is a debtor. And the authority or the person in whose name the charge has been created is said to be the mortgagee. It is said to be the mortgagee over there. So it's a legal agreement between two parties. One, it's a mortgager, other one, it is a mortgagee. The borrower is mortgager and the lender is mortgagee, where the borrower actually uses a immovable property like real estate or some heavy material, heavy machinery which is attached to earth, right? So it's a immovable property we are talking about. So it can be used as a collateral so as to secure a loan. So these conditions are particularly required. So a charge has been created on the property, but why it is created? So as to provide collateral security so as to secure the loan over there. That's why the charge has been created, right? So let's understand the different types of mortgage. We are having the different type of mortgage, like we are having the simple mortgage. We are having the particular, let's say, English mortgage, or usufructuary mortgage, or mortgage by conditional sale, or particularly we are having the equitable mortgage or anomalous mortgage. So in total, we are having 6 type of mortgage. If we talk about the mortgage in detail, we are having 6 type of mortgage. But right now we are going to talk about 2 major mortgage over there. One, it's related to simple registered mortgage. Now, as the name suggests, it is to be registered. It is to be registered, and the mortgager personally binds himself. In this scenario, the mortgager personally binds himself so as to pay the mortgaged money or mortgaged debt, and it actually allows the mortgagee to sell the property if the particular person fails to pay so. But that particular possession is to be taken by the intervention of court, right? And the title deeds of the property are going to remain with the borrower in that scenario. Title deeds are not to be given over there, and the possession of the property will be with the borrower. That will not be given. But a legal charge in this scenario, the title deeds are not to be given, but a legal charge is to be created. So the title deed is to be remaining with the borrower over there, but a legal charge is created on the property in favor of the lender over there, and a deed of mortgage must be registered with the sub-registrar. So when you're going to create a charge of a simple mortgage, or what we say is a registered mortgage, in that scenario, a charge is to be created. A registered charge is to be created with the sub-registrar related to the same, right? And no transfer of title deeds is there. Possession is with the mortgager over there, and for the property can only be sold, like I told you, that the property in this scenario can only be sold with the court intervention and not otherwise. And whensoever a registered mortgage is there, 2 witnesses are minimum required, and further there is actually involved the payment of stamp duty and for the registration, and definitely it's more costly, right? And the other one that is mostly used in case of banks, that's the equitable mortgage. Now, equitable mortgage is actually related to what? That the borrower is going to create a mortgage in favor of the mortgagee, that is a lender, by depositing the title deeds of immovable property as a security to the lender, and also confirm the reason that why the borrower is going to deposit the title deeds to the lender over there, right? So there are lesser complications involved, right? So there are lesser complications involved, and further the requisites related to the same are what? The requisites related to same are that the borrower says that I am going to take a debt. For which purpose? I'm going to create a equitable mortgage charge on my property. For that particular purpose only, we are going to submit deposit the title deeds over there. And for the equitable mortgage can only be made in the notified towns, or particularly in the let's say metro cities over there, and further it can be made by the mortgager or agent over there, and for the intent must be given, like I told you, that if person A wants to create a mortgage charge, equitable mortgage charge, in that scenario person A must be giving the intent. Person A must be giving the intent that the person A wants to create a charge on the property, right? So that's the case. So that's the case over there. And here there is actually deposition of the title deeds. So the title deeds are to be deposited. The title deeds are to be deposited with the bank over here, right? So that's the scenario between the same. And also it's related to letter of intent to be obtained, as I told you, right? Now let's understand the important terms of there. It's related to right of foreclosure. It's related to right of foreclosure. Now right of foreclosure is actually related to what? There are actually two rights. One, it is related to right of redemption. One, it is related to right of redemption, and the other one, it's related to right of foreclosure. Now right of redemption is actually the mortgager's right. If we talk about the redemption right, we are talking about the mortgager right, where the mortgager is having the right at the property which he has kept with the lender over there, so as to create a charge on the property over there. And when we talk about the right of foreclosure, it is mortgagee's right. That is a lender's right. Right? So right of foreclosure basically gives you right. Otherwise, the limitation of the particular thing is 30 years. Limitation of redemption is, right of redemption is 30 years. What do you mean by limitation? That if you have given a home loan and particularly you have actually going to sell the property over there, you are to wait for 30 years that you can be selling the property, because otherwise the right of redemption will be invoked, right? It will be basically of no use, right? So it's of 30 years over there. So that's why the lenders wanted that what if we want to get recovery of our debt due. In that scenario, the lender can be applying to the court and further can be asking for right of redemption, and if granted, the banks can be selling the property beforehand. Okay. Further, it's related to priority of charge. Now there are multiple scenarios related to same. It may be the case that the mortgage creates multiple equitable mortgages. Let's say case mortgager A is having a property and multiple equitable mortgages are created for against different banks, A, B, C bank, PQR bank and XYZ bank. Now in that scenario, if in the same favor of the property, the different charges have been created with the different lenders or financing institutions over there, the first institution to receive the mortgage will be having the priority. Only this particular institution, the first institution which has received the mortgage over here, will be having the priority over the same, right? That's related to multiple charges if created by the mortgager. Further, it may be related to if a mortgager creates separate registered mortgages. Now, separate registered mortgages we are talking about. Let's say case that you were actually having a separate registered mortgage. Let's say a person A is there and he created separate registered mortgages against the property with the sub-registrar against in the name of the different financial institutions. Right? Now, the priority of the charge is determined based upon the date of execution of the deeds. Now with this particular financial institution, it was particularly observed on 12th March, and this one was observed on 13th March, and this one was on 14th March. Now in that scenario, this one was executed at the earliest, so it will be having the priority. Okay. Now the third scenario is related to if mortgage gives the same property in both equitable and registered mortgage. Now let me clear you one thing over there. Let's say case person A is here and with XYZ institution he created the equitable mortgage, and with ABC institution he created the registered mortgage. Now it's not related to the case that equitable mortgage is inferior to the registered mortgage. That's not the case. There are no inferiority that is involved in case of equitable mortgage. If we compare the equitable mortgage and the registered mortgage, that's not the case. So priority of the charge will be determined based upon the date of deposit of title deeds in case of equitable mortgage. Okay, so in the case of equitable mortgage, the priority of charge will be based upon the date of deposition of the title deeds, and in case of registered mortgage, it will be based upon the date of execution of the registered mortgage deed over there. Let's say case equitable mortgage, the title deeds were deposited on 27th March, and further the registered mortgage was executed on 4th of April. In that scenario, this particular equitable mortgage will be having a priority. Okay. Further, it's related to registration of documents, so proper stamp duty is to be done, and further legality is to be checked, and further non-stamp duty particular instruments are not admissible as evidence over there. That's the first point. It's related to registration of document is very much required. So if the registration is to be done, stamp duty is to be paid. stamp duty is to be paid. So whatsoever the applicable stamp duty is there, that is to be paid. And further, if it is not stamped adequately, in that scenario it won't be admissible as evidence over there. And registration of document is actually required for conservation of evidence, for assurance of title, for prevention of fraud. And further, it's related to fees for registration of documents. Fees for registration of documents. Now, the state government will be having the authority so as to fix the registration fees, right? And further, for leases, registration fees depends upon the premium, sum payable of the period, and the period of lease over there. For lease purposes, we are talking about, right? Otherwise, the fees for registration of document is prescribed by the state government. And if we talk about the lease document, lease fees over there, in that scenario, the registration fees whatsoever basically depends upon what? That depends upon the premium amount that is to be paid, or the sum payable, or the period involved, right? And further, it's related to time frame for registration of document. Time frame for the registration of document. Section 23 of the Registration Act 1908 actually requires that the document the documents to be presented for registration within 4 months from its execution date over there. So when the execution agreement has been signed, let's say case A has signed an agreement with B over there for particular registered mortgage, in that scenario within a period of 4 months it must be registered. Within a period of 4 months it must be registered. And further, if the document is actually not registered for 4 months, in that scenario the parties can be applying to the registrar for particularly asking the registrar so as to give them 4 month more subsequent period, but by paying a fee amount that should not be exceeding 10 times of registration fee. Let's say case first time registration, when the agreement was done, you will be given 4 months that you have to register the documents. Let's say case that particular period lapsed. Now in that scenario you can apply to registrar, and for the registrar can give you another 4 month period, but you are to pay penalty which cannot be exceeding 10x amount of the particular let's say the stamp amount, the registration fee which was to be paid, right? And when the 8 months have been elapsed and you have not done the registration, in that scenario you can be executing a deed of confirmation. You can be executing a deed of confirmation which will be confirming the validity. So after the passage of 8 months over there, A and B, both the parties, they can be executing what? They are to execute deed of confirmation that will be confirming the validity, and that will be having a binding nature so as to main deed over there. And after that they can be asking for registration again within a period of 4 months over there, right? So that's the scenario. Further, it's related to verification of the title deed. So how the title deeds can be verified? You can be taking the copies of documents lodged with the sub-registrar, right? Let's say case previous seller, person A sold the property to person B, and you want to verify the title deed document over there. You can be visiting the sub-registrar office, and further you can be doing what? You can be asking for the copies of the title deeds over there, or the documents lodged for the title deeds over there. And further, the objections to the title deed can be verified after going for the search report, and further the property has been mortgage registered with the sub-registrar over there. We can be going for the same. And also we can be doing a pre-CERSAI. We can be doing the pre-CERSAI over there related to verification of the document. That will also be indicating if the property is actually in the name of the person over there, or any other encumbrances is existing on the particular information or not. So CERSAI is actually what? CERSAI is what? CERSAI is Central Registry of Securitization Asset, Reconstruction and Security Interest of India. CERSAI is Central Registry of Securitization Asset, Reconstruction and Security Interest of India, and it's a central registry where the different charges related to securitization, reconstruction, and for mortgage of the property, these are to be registered. So when you are going to basically create a charge for mortgage, that is to be registered with the CERSAI. And further, if you are going to create a charge for hypothecation and amount is exceeding rupees 1 lakh, then also the charge is to be created with the central registry over there. It is to be created with the central registry over there. And even before sanctioning a loan, you are to basically do the pre-CERSAI. You have to do the pre-CERSAI. Now pre-CERSAI is related to what? That we are going to create a search on the portal that whether the charge is already existing in the name of the same borrower for the same property or not, right? We want to basically conclude for the same. So that's the main funda related to it. So CERSAI was established on 31st March 2011 under the CERSAI Act, and the objective was actually to maintain what? That we want to basically have a central system where we are going to register the charges of securitization, asset reconstruction, security interest, etc., so that we can be looking for that if any previous charges existing over there or not, right? And further, let's have a look at the nature of transaction to be registered. So when it's related to particulars of creation or modification of security interest by way of mortgage of title deeds, when we are talking about the equitable mortgage over there, so in that scenario, if the loan amount is greater than 5 lakhs, if the loan amount is greater than 5 lakhs, then it is rupees 100 per service tax, etc., right? Service taxes are going to be extra, so it is going to be rupees 100 over there. And in all the cases, service taxes, that is GST, will be paid, is to be paid extra. And when it's related to satisfaction of any charge, then in that scenario there is no other fees to be paid. Now satisfaction is related to what? Let's say case A took the loan from XYZ bank. XYZ actually created a charge on CERSAI. XYZ created a charge on CERSAI, and now A has repaid the full amount, and XYZ is to particularly do what? So is to satisfy that particular charge, that now this particular loan is all clear, right? That is satisfaction. For satisfaction, no amount is to be paid. For basically creating the charge, 100 rupees plus service taxes is to be paid, right? And further, if it is related to particulars of securitization of reconstruction of the financial assets, in that scenario the fees is rupees 500. In that scenario, the fees is rupees 500. And if it is related to satisfaction of this particular charges related to securitization or asset reconstruction over there, it is rupees 50 over there. It is rupees 50 over there. These are the charges. And for any other application for information, so if you want to just basically do the pre-CERSAI, that is a search report over there, is to be drawn. In that scenario, the fees is rupees 10. It is rupees 10 over there. And any application for continuation of delay, up to 30 days. Now these things were previously there, but now there are stringent conditions. Previously, if the delay was there related to registration of charges, you can be applying, and further you have to pay the fees, etc., extra fees or penalty, etc., then you can be registering a charge. But now that's not the case. So if you fail to create a charge on CERSAI and someone else actually created the charge on CERSAI beforehand, that's the case, a person went to two banks, ABC Bank and XYZ Bank, and further offered the same property for creation of charge, right? Now in that scenario, ABC created a charge of the property on the portal over there, on the CERSAI over there, but XYZ failed to do so. Now in that scenario, ABC will be getting the priority. ABC will be getting the priority of the charge over that particular property than the XYZ. Even though if the deposition of title deeds was basically XYZ previously or beforehand, let's say case A deposited the title deeds with XYZ on 4th of April and with ABC on 11th of April, but still the charge is actually registered beforehand by the ABC Bank over there and XYZ was late. In that scenario, ABC will be getting the priority. ABC will be getting the priority over the charge, right? Further, it's related to monitoring. Now monitoring is actually related to post-sanction activity, right? How the funds were used. Let's say case that the funds were given for purchase of some two-wheeler or four-wheeler. Now we need to check that whether that particular asset has been purchased, right, or not, right? So it basically involves documentation, disbursement, periodical inspection, follow-up for the recovery, and loan reconstruction over there. Okay, and CAD is actually responsible for monitoring. That is a Credit Administration Department will be responsible for monitoring, right? And further, it's related to inspection. Now, inspection would be conducted as a stipulated in the sanction. Like, let's say case that in case of car loan, the car is to be inspected for every 6 months. That's actually related to what? That's related to inspection. Right? And the inspection report must carry the noting the condition of the property, that what is the condition of the property, verification of the tax have been paid, or encumbrance noted, or something related to it. It can be half yearly, it can be periodically, right? And further, any change in the condition must be triggered, and further full review must be given for the same. And further, it's related to recovery. Recovery is actually related to that we need to check that whether we have been receiving the EMI or the amounts as per the schedule over there or not. That whether the whatsoever the amount is there on due dates, are we going to receive the same or not, right? And further, it's related to restructuring. It's related to restructuring over there. Now let's say case that there is not a willful default, that the borrower's integrity is still maintained, and further he's having the willingness to pay the amount, but he's not under the conditions. Now in that scenario, we can be restructuring the loan. And let's say case there is a borrower who took a loan of rupees 5 lakh He's having the intention, but right now he's not able to pay. So, and for the total interest accumulated so far is 50,000 rupees, which is not paid by him, and further it's overdue. Now we can be actually taking a note from the borrower side, and further can be sanctioned from our authorities, and further can be going for restructuring over there. We can be going for the restructuring over there, where we'll be doing what? Where we'll be actually be restructuring the loan, and the EMI now will be created as a mix of these two components, right? And for the, let's say case, now the new EMI will be based upon 5.5 lakhs over there. Okay. After that, it's related to closure of account. Now, closure of account is actually when the repayment has been done in complete, along with the interest over there, processing fees, service fee, documentation fee, etc. Each and everything has been paid. In that scenario, the loan account is to be closed. The loan account has to be closed over there. And further, if the borrower has no other outstanding or contingent liability to the financing institution, the charge which was created by the financing institution of the property of the borrower, that is also to be satisfied, and that is also to be closed. Okay. So that's related to it, and further it may be related to the home loan frauds over there. It is related to home loan frauds. Now, what type of home loan frauds can be there? It could be related to fabrication of income documents. It could be related to fabrication of income documents. Your ITR is false ITR, or it's not showcasing the actual income over there. That's the thing related to it. And further, it may be related to verifying. So how we can be mitigating the same? We must be verifying the salary slips if there, and we must be comparing the income details with the bank statement, so as to basically check that income is actually matching with the amount of figures which have been received, right? And we can be cross verifying the income claims with income tax assessment orders. Okay. And further, it's related to loan amount encashed by third party. Let's say case, you basically gave the loan to person A, you disbursed the loan, and the loan was given to person B over there, person A over there, right? And further, let's say case, person A gave a check to person B which was not used for intended purposes, right? And the amount is actually used by the third party over there. Loan disbursement made through checks or demand drafts are encashed by third parties or agents instead of the intended beneficiary, right? It could also be the case. How we can be mitigating the same? That we must be crediting the loan amounts directly. Let's say case we use the NEFT or RTGS, directly crediting the amount to the beneficiary account over there, or confirm the correctness of the beneficiary account information before disbursement over there, right? That is to be done. And it could also be related to forgery of the title documents, where the ownership documents are particularly forged. In that scenario, we must be obtaining a certificate from the panel lawyer so as to validate the authenticity of the submitted documents. And further, we can also be checking the past mortgages or particular encumbrances under the CERSAI over there. And also it could be related to overvaluation of the property. The property was valued rupees 40 lakh, but the approved valuer showcased it to be valued at 60 lakh rupees over there. 60 lakh rupees over there. Now, based upon that, the eligibility will be increasing, right? Now, in that scenario, we must be conducting a physical property visit so as to basically assess the market or forced sale value over there, right? One, it is related to market value of the property, and the other one is related to realizable value of property. So we must be looking for the same, and we must be physically be visiting the site over there, or survey. We must be conducting a survey over there, that what is a comparable price of other properties in that particular area, right? And further, it's related to sale of property with existing loan. Now, it may also be the case that the let's say case A want to take a home loan, and he want to purchase a built-up house, and further he is to purchase a built-up house from person B over there, who has already taken a loan on the same property, but that loan has not been closed yet, right? And further, A is going to create a charge of that particular property with XYZ bank over there. Now, so as to check that NEC is to be obtained. We must be checking the CERSAI portal over there. Clearance of the existing loan is to be taken before transferring the ownership over there, right? And every due diligence is to be taken in that particular part, right? For that, it's related to the misrepresentation of end use of loan. The house loan was taken for construction, but the funds were used somewhere. Let's say this person took a house loan of rupees 80 lakh. Now, 40 lakh was legitimately used, but another 40 lakh was not used for construction purposes. Now, in that scenario, what should be done? Direct payment to the seller is to be done, or to the beneficiaries to be done, to the builders to be done. A regular inspection must be done related to verification, and further, related to every stage completion, a certificate is to be obtained. A certificate in the same respect is to be obtained, right? So these things can be done, and we can be avoiding the different frauds related to home loans. Okay, so that will be all related to this particular video. I hope that you must have enjoyed the content of this particular video. So do particularly like this video and share this video, and don't forget to particularly join our courses. We will be getting the full course of videos, chapter wise previous questions, mock test, mega mock test of all the papers of JAIIB, and simply on sign up you'll be getting access to all the PDFs of JAIIB. So do sign up right now and start preparing for the same.